Okay, guys, now let's look at some of the liquidity pools on the Euro USD on the 5-minute time frame, and also it works on any time frame. It's all fractals. Depending on your trader schedule, you can trade liquidity pools on the daily, the 4-hour, even the weekly chart, even the 1-second chart on the 5-minute chart. So in this example, I'm just going to give you an idea of how it looks like on the 5-minute. So again, we've got some equal lows, as you can see. Equal lows, and this is the most important structure. So we're implementing this structure to the previous higher low, as you can see. So we're using this range, and it played out pretty well in this example. We could also argue that this is a larger equal low setup, as you can see. And then where would our liquidity pool be at? It will be literally below this area. So we're looking for a stop on of this area, and we're implementing the previous little structure. So this will be our most recent relevant liquidity pool as a plan B. This particular setup, would I personally be taking it? No, there is no pattern approaching my area, or maybe there is actually on the smaller time frame. Yes, there is actually a pattern in fact, but this was on most likely on the 1-minute time frame. So again, we've got the 1, 2, 3. This entices traders to go short, and then boom, a boomerang towards where? The liquidity pool that's in confluence with the stop on of this area and the equal lows. So this would have been a good trade actually. Plan A. Plan B, most likely I'll cancel it since this pattern was here, which I didn't actually see before the video. Okay, so let's go to the next example. Again, this is the 5-minute chart. And then what do we see? The next level of the liquidity pool is here. As you can see, simple stuff. We've got the equal lows. You're looking for a stop hunt, but most importantly, the previous structure. So we're using the range of this area and the previous structure. So we're using this as our range for the liquidity pool. Now, this one would have failed, which is fair enough. This wouldn't have played out. Is there a pattern? Maybe there is on the 1-minute time frame. I can see one here. So as you can see, there is the equal lows. So in this particular example, plan A would have failed, and we would have put our liquidity pool from this area. Since we're looking at this particular structure, plan B would be below this structure, and even this one would have failed, to be fair. So this would have been a loser. Let's go to the next example. This one's pretty clean. The liquidity pool is a little bit wide, something I wouldn't really take. And the reason it's wide is because the equal highs are wide. There's big distance between them. When they're really small, such as this, then the liquidity pool will be a lot thinner. So in this example, again, we're skipping the previous structure, which is these two. Then we're doing a stop hunt of the most relevant structure. And we're starting our liquidity pool from here to where the next level of structure is, which is this area here. So within this area, you're going to see imbalances, bank levels, liquidity pools, etc. But this is just averaging out all the unfilled liquidity. So this is the liquidity pool. Let's go to another example. Okay, let's see what else is happening. Okay, very clean example here. Equal lows, as you can see. We're doing a stop hunt of the previous structure, starting from the previous leg down. So this is our liquidity pool. This one played out very well, as you can see. But is there a reason why? Yes, there is. Look at the boomerang. Let's do this again. Nice little boomerang there. And the reason it's a really good one is because it's a very clear pattern. It's not the best of boomerangs, but it is a pattern. This is what we need to see. We need to see something like this. This is textbook. 1, equal lows, 1, 2, and we've got the pattern 1, 2, 3. This entices traders to go long on the 3rd tap, and traders will be looking at this as structure, but then stop hunt towards the liquidity pool anywhere within here. And then it rallies to the upside. To redefine the liquidity pool, you can simply just zoom into the smaller time frames and look for 1 minute or even 30 seconds bank levels and liquidity pools. But on this example, we're just implementing the basics structure of the liquidity pool. Again, let's go to the next example. which was up here. So with this one, textbook equal highs, lovely structure. We're using a range of this particular liquidity pool, but it got stopped out. Why is that? Again, look, there's no pattern there, is it? There is no pattern whatsoever. So this is the reason why we need a pattern. If we've got a pattern, it's a high probability liquidity pool, but we need equal highs. So this is definitely a trade that you have to avoid. There's no pattern, so it's invalid. Right, lots of momentum as well. Okay, let's go to the next example. What do we have? Equal lows again. This is the previous structure. This one's a really thin one because you can see there's a spike here. So we're using this range, and this one in particular would have potentially, taken you out, would have not played out, which is fair enough. Now, is there a pattern there? It's the question. To be honest, I can't see any patterns. Nope. Maybe here. So yeah, look, this would have been a pattern, but the liquidity pool is inside of the pattern. It needs to be either perfectly on the pattern or most likely just outside of the pattern. It's inside of the pattern. So this means it's an invalid liquidity pool. You can still take it and you will make money, but the win rate and the probability of it playing out dramatically decreases if you've got any smart money levels inside of a pattern. It needs to be outside of the pattern. Very, very, very important. Okay, let's look at the next examples. This one's a really, really wide one. Equal highs. We've got the structure here. So we're doing a stop hunt of the equal highs, and we do our liquidity pool based off this. Look to the left, and there we have it. We've got our previous leg down, and we're using this range, right? So your order always has to be at the very start of the liquidity pool, always. Stop loss just above, and obviously your TP depends on your full technical analysis, which obviously we're not doing now. We're just giving you an example of liquidity pools, etc. So this would have been a pretty decent trade. In terms of the TP, I don't know where I would have put it, but that's down to a different video. So that's another decent example of a liquidity pool. Let's look at some more examples. Let me see. Okay, this one was pretty decent. You've got the equal lows, as you can see. Equal lows, do a stop hunt of the previous structure. And what do we have? We've got a higher low there, and we're using the range starting from the very bottom of this wick to the very bottom of this. This would be the top of the zone, as you can see. And lovely, lovely trade. Now, do we have a pattern? Of course we do. Look at that. Textbook boomerang with the liquidity pool, right? So we've got the 1, 2. When there's a third tap and there's a rejection, these are the high probability ones because it's enticing traders to go long only to get stopped out and massive rally to the upside, and brilliant risk reward as well. Had you taken it at this particular area, should have been decent. Again, you need to include the spread, obviously. So 1 pip above there and 1 pip above there, more or less. And your TP, again, just the very conservative TP will be this bank level. But really, you'll be doing your full analysis, and maybe you might be holding a trade a lot longer if you look to the left and you've got maybe even a further pattern that's in confluence. There we go. So really, your TP should have been up here somewhere, at the top of the pattern somewhere. So again, nice little trade. This is something I wouldn't take, but I'm just giving you guys an example. Look at this equal lows, way too big. This is for the daily and weekly traders, but you can see it's still played out, right? So what are we doing? You've got the equal lows, right? And you've got the previous structure. Start your liquidity pool from here to the bottom of the previous leg, and this is your liquidity pool. Still would have played out, would have been a pretty decent trade, long-term trade, regardless of where it could have been gone to. You know what? I think this is a recent trade that I took. No, I didn't take. I forecasted it on the live stream. I just remembered. It's a trade that I didn't personally take, but this was the pattern. It's just a bigger version of this schematic that we see here. Same fractal, but on a bigger scale. So when you see a big pattern like this, I wouldn't advise, having your trade like this and having a a trade like this. It's just going to take forever. You don't have an edge. What you need to do is you need to wait for a break of structure. Then you look for the retest of the area that broke structure, and then you get involved in a long. So I believe this was a trade that we took with the members, way more defined. But that's for a different video. I'll just check out the videos that I did on the live streams from 18th and the 19th of October. So that's another example. It's just a bigger example of a liquidity pool setup. Okay, this was a pretty decent long. I like the compression. Just get this. We've got the previous structure, quite hidden, but it's still a previous move up. Start from here. And then we've got the bottom of this area, so you can see, right? So this would have been played out. Again, we do have some compression and the third tap on a smaller time frame. Again, same schematic playing out over and over again. Your TP, again, that's completely different. It could be a banker block, it could be a bank level, might even just be a larger pattern that's forming where you need to come out. I don't know, it could be lots of things could happen for your TP. We're not focusing on TPs, we're just focusing on how the liquidity pool looks like on the live markets. Okay, in this example, this one played out pretty well. What do we have? We've got the equal lows, we've got the previous structure, and we've got this particular structure here. In fact, this should be, to be perfectly precise, there we go. So this would have been a pretty decent trade. Have we got a pattern there? Yes, we do. We've got 1, 2, and 3. And we also have the start of this pattern. So again, the trend line needs to be parallel to this one. So this doesn't make sense. This is why it should have started from here. So it's parallel. And this would have been a really good boomerang. Again, we've got the 1. You can count this as a 2. This was the 3. And then the fake out with the boomerang, liquidity pool, equal lows, and a rally to the upside. Most likely to this area because, again, we've got a equal high setup and we've got the previous structure starting from here. As you can see, we've got this structure here, right? So we're doing it from here to this area here, this one here. Now, would you take this trade for a short based of this equal highs? Not necessarily, because there's not really any patterns here, is it? There is no pattern, so you avoid this trade. All about having a pattern there. Okay, now let's look at some more examples. What is this? Okay, equal. Oh, this is the live markets. So what's it? Yeah, this is the live markets right now. Equal lows, and we've got a liquidity pool. Now, with this particular liquidity pool, I personally won't take it. It's way too thick. What I will do, however, is redefine the liquidity pool. So the way I'll be doing it is I'll go to the smaller time frame, go on the 1 minute. So let's say you're trading the daily time frame and the liquidity pool looks way too big. Go to the 4 hour to redefine it. Right now I'm looking at the 5 minutes, so I'm going to go 1 time frame below that. So the time frame below that would be the 1 minute. So I'll be looking at this here, look. So this is the start of my redefined liquidity pool on the 5 minute. So let's go back to the current live markets. Now this is much better. So if I was to take this trade, which I'll probably will, I will be taking this one. However, I do need a pattern. So if price is to come down, I'm only going to take it if I see something like this, for example. Then yes, I will definitely be taking this trade, especially because I'm up a good 20 odd this week. If you look at the live streams, we've been smashing it on the daily forecast for the members. So we've got 1, 2, 3. Now, if there's no pattern here and it starts to drop with a bit of momentum, really what that means is it will probably form a larger pattern such as this. And then this will just be completely invalid, if I'm honest. And then this liquidity pool will be valid from here. So there's equal lows here that I missed out. Equal lows, and we're looking at a liquidity pool from here, as you can see, because we're looking for a stop on of this area. and the previous structure. So this would be a very, very good liquidity pool if this bigger pattern plays out, which is in confluence with, if price does decide to drop, you can see there's this bank level here is invalid, but you can see 1, 2, 3, maybe a rejection, and then a stop hunt, and then a big rally to the upside. So this is actually something I'm going to cover in today's live stream. Pretty decent potential boomerang currently forming. So to wrap things up, hopefully you guys enjoyed today's analysis on liquidity pools, and I hope you guys can start smashing it from it.